All right, let's get right into it. Today, we're going to visually walk through one single, complete market DNA cycle. The asset we'll be tracking is WTI Crude Oil, and we're going to follow a very specific, predefined path from the beginning all the way to the end.
So you might be asking, what is market DNA? Well, it's a proprietary geometric system designed for analyzing markets. It basically uses these predefined shapes you see to map out potential paths for the price. Now, what's really key to understand here is that this system doesn't use any traditional methods, so you won't see any technical analysis, no fundamental analysis, and no quantitative indicators. It's a completely different approach. Here's a quick look at our roadmap for this explainer. First, we'll get an overview of the cycle itself. Then, we'll go step by step through all 4 phases, starting with the plan, then the progression, and finally the completion. After that, we'll wrap up with a performance summary and some really important disclaimers.
Okay, let's kick things off. Like I mentioned, the asset we're documenting today is WTI Crude Oil. We're going to break down one entire cycle, piece by piece.
Now, this is a really important point, the sequence. The path this specific cycle took was perfectly chronological. It went from phase 1 to phase 2, then on to 3, and finished at phase 4. So we're just going to follow that exact path as it happened. So let's start at the beginning with phase 1. You can think of this phase as the plan. This is where all the initial parameters and the risk strategy are laid out before any of the major price action unfolds. So take a look at this chart, because this is our starting grid. This shows you the entire initial setup for the cycle. You see that level M there? That's our primary entry point. And then, notice that level marked PC? That's a secondary, optional entry, and it's a really important part of the overall risk management plan.
Okay, so with that setup in mind, let's look at the key risk parameters for this plan. Everything is based on a hypothetical capital of $100,000. The maximum allowed drawdown was set right at 5%. And check out the trapezoid time duration. It's 56 days. That number, along with the contract size and a few other things, helps calculate our trade size, which comes out to 0.28.
And just so we're absolutely clear on how that trade size is calculated, the source material gives us this exact wording. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size.
So with the risk parameters all set, the plan also defines some very clear price targets. This table here shows the pre-calculated targets for what's called Scenario 1. That's the scenario where only that first entry point gets triggered. The full exit target, T3, is set at $64.10. This projects out to an expected profit of about $1,800, or put another way, a 1.8% return on our hypothetical capital.
Okay, so that was the plan. Now we get to see what actually happened. This next section is all about the cycle's progression through phases 2 and 3. We're not going to analyze anything here. We're just going to observe and narrate the price action exactly as it unfolded.
And here we see the first big move. On December 26, 2025, the price comes down and touches the lower boundary of that trapezoid. This is a key moment because that contact marks the official completion of phase 2.
All right, this next slide shows us the next major milestone. So after hitting that lower boundary, the price continued its move up. Then, on January 14, 2026, it hits that end price level right at $62.33. And with that, phase 3 is officially in the books. And that brings us to the final phase of this whole journey. Phase 4 is all about the completion of the cycle. This is where we get to see if the price action reached its final, defined conclusion according to the model. And here it is, the final result. As you can see, the price did in fact reach the upper boundary of the trapezoid. It hit that final target price of $64.10. This event completed the entire cycle, though it happened with a 7-day delay compared to that initial time projection we saw back in phase 1. So, the cycle is complete. Now for the big question, right? How did the actual outcome compare to the original plan we laid out back in phase 1? Let's take a look at the final performance numbers. This table makes it super easy to see it all side by side. The expected return of 1.8% was hit exactly. The max drawdown was only negative 0.76%, way below the 5% limit. And the time it took was 68 days, a bit longer than the 56 days that were expected.
Let's just zero in on that return for a second. The final realized return was 1.8%. What's so incredible here is that it's a perfect match. It's exactly what was calculated as the expected return all the way back in phase 1.
And what about the risk? Let's talk about that drawdown. The actual maximum drawdown was just negative 0.76%. This is a really big deal, because it means the trade stayed well within that 5% maximum risk limit that was set from the very start.
Okay, to finish up this documentation, we need to go over some very, very important disclaimers. So please listen carefully to these next few points.
First and foremost, this is not financial advice. Second, leverage above 10 is prohibited. It's also crucial that you do not invest essential personal funds. These analyses are strictly for documentation and public verification purposes. And finally, any risk management must always follow the specific user's instructions.
And that officially completes our visual walkthrough of this WTI crude oil cycle. This was, of course, just one example of the market DNA system in action. If you're curious and you want to see more documented cycles just like this one, you can always find more info at the website you see on your screen.